So guys, welcome to VRDNation. This channel is dedicated to explaining each and every concept of investing and trading pertaining to the Indian stock market, and we do it in such a way that we explain these concepts using real life examples, real life case studies, real life trades, so that even an amateur, even someone who is just starting out without having any prior knowledge of the stock market can easily understand these concepts, right? So if you are new to this channel or if you are hearing me for the first time, do not forget to subscribe. All right. So having said that, let's talk about the topic at hand, which is a tick, right? So what exactly is a tick? So in the world of trading, you would hear this term tick a lot, right? So people talk about tick by tick data, or traders talk about, I want to trade based on each tick, or people will talk about the last traded price of a tick, right? So what exactly is a tick? So a tick refers to every single change in the price of a stock or an index, right? So every single change is recorded as a tick. So for example, let's take the stock of Infosys. Let's say it opened up at a price of 2000 rupees on a certain day, right? So at 9:15:01, the first tick of Infosys will be registered as 2000 rupees, right? That's the first tick. Now, if the price of Infosys changes from 2000 rupees to 2000.5, that would be considered as the second tick. From 2000.5, if it goes to 2001, that would be considered as the third tick, and so on and so forth. So basically every single price movement of a stock or an index is tracked through ticks throughout the trading session. So now you can imagine that for any security that trades on the stock exchange, there can be a lot of ticks, and the number of ticks can vary depending on which stock or index are we talking about it. So if it's a small cap stock which is not traded too many times, maybe it will have a few hundred or maybe a few thousand ticks in a day. But if we are talking about a large cap stocks like Reliance or Infosys or TCS, then the number of ticks can go into several thousands or even millions. And if we are talking about Nifty and Bank Nifty and the derivatives of these two indices, then the number of ticks can even be very higher, because these securities are traded much more frequently than the small cap stocks. So that is the tick. Now another concept related to tick is called the tick size, which refers to the minimum increment or decrement in which the price of the stock can move. For example, let's take a stock which is trading at currently, let's say 100 rupees, and it has a tick size of 5 paisa. So if this stock has to be bought or sold, it can only be done in the increment of 5 paisa only. Right? On the upside, it can be bought or sold at 100.05 or 100.1. And on the downside, it can be 99.95 or 99.9, but it cannot be 100.01, right? Or it cannot be 99.97, because they are not in the multiples of the tick size. And even if, let's say, for example, you don't know about the tick size and you place an order, your broker will remind you that, boss, you cannot place your order in this price. You have to either pick on the upside or on the downside of the tick size. Now, most of the stocks and indices that trade on BSE and NSE, they have a tick size of 5 paisa, right? As you can see here, most of them, they trade with the tick size of 5 paisa. But there are also some cases where the tick size is 1 paisa as well, as you can see in the case of Nifty Bs. So now that you have understood the concept of ticks and tick sizes, let me ask you guys one question. So when you open your broker's terminal, it can be Zerodha or Upstocks or 5 paisa or whichever, and you see the price changing every second, my question is, are you getting tick by tick data? And the answer is no. The brokers in India send us the price data from the exchanges every second. But what you need to know is that within 1 second, sometimes there can be hundreds or even thousands of ticks that would have been generated. But what we get is what happens at the end of the second. So this is something which is very important to understand, because it explains sometimes what happens to us, which is not very easy to understand looking at the charts, right? So sometimes we look at a chart and we see a certain price, but then we look at the order which just got executed, the price is nowhere to be found on the charts. Right? And this is something which I have also explained in a video about stop losses. You might want to watch that one as well. So this is the first thing to understand about ticks. The second thing that you need to understand about ticks is that if you plan to do back testing and you need some historical data, there are many data vendors who claim to sell tick by tick historical data, right? But what they really are selling is a second level data, means every second whatever was the price change they are giving you. They are not giving you, technically speaking, they are not giving you the tick by tick data. Now personally, I don't think that a retail trader needs tick by tick data because it's too much for us to handle. But I also think that from these data vendors perspective, claiming that they are selling tick by tick data, whereas in reality what they're giving is a second level data, is also misleading. Now comes the last question, that if we as retail traders, if we are not using tick by tick data, then who does, right? Who needs this tick by tick data? Well, tick by tick data is used by institutional investors who deploy algorithmic trading strategies, right? So we will discuss about these things maybe in subsequent videos. But I hope that from this video, you understood the basic concept of tick and the tick size.